Another day, another video, man. Welcome to where good things happens, man. Chat all every day. Chat all every day, man. So, have you good? I think your week has opened well. Mine has. So, today we are going direct to the video. Remember, we analyze our best traders, man. Today, we are going to analyze the market mechanics. That is the strategy. It goes by the one of the strategies known as trading. He's an Asian guy, very good guy at trading. I have come to realize he has so many subscribers, man. I never thought of it as that. So, as you can see, this is what his trading strategy basically entails. It's a very good trading strategy, very simple strategy if you understand the dynamic, but you have to practice it. Every trading strategy you have to practice it, because you can't identify zones in the same time or in the same speed if you haven't understood the market. You can't be able to find the zones in a very quick way if you don't understand what you're looking for. So his trading strategy entails swing lows and swing high. This is where I've noted them for you because I want to make the video short. So swing high, swing low. So the swing lows are within the supply areas, because we have to make sure the supply areas are mitigated before we take a trade. And same case happens here. As you know, if you hear anything about supply, remember the other side of the coin is demand. As you can see, supply demand. So basically what his trading strategy entails is swing high, swing low, and mitigations of those zones. That's it. There are some other dynamics that are going to happen there, but this is what we're talking about. So he has to go and find high probabilities. So high probabilities happens after, if let's say, for example, this is the market, this is an uptrend. Now remember, always the trend is your friend. So when the market comes back to mitigate this area and this becomes the swing low, he highlights it and marks it. Then when the market breaks, okay, when the market breaks and continues to rally, it changes the market structure to bullish. So what he has to do is to find areas that would give him higher probability. How? When there are new high highs and higher lows, higher highs and higher lows, okay. And same case applies low highs and lower lows. I'm not a fan of these trading strategies of high highs and lower lows, and I'm trying to remember it off my brain. That as you can see, that's what the market does. When the market does that, he will take trades, okay, high probability trades, when the market breaks those levels or when the market changes, okay. So as you can see, this trading strategy, it's very simple when I'm showing you here, but when it comes to the charts, that's where everything happens. So you have to be careful if you're looking for a bullish or a bearish, okay. So for example, you have to find a higher time frame to understand what you're dealing with. So let's go straight to the charts, okay. I'm trying to make these videos as short as possible. So for example, this is a whole chart, okay. I didn't know the time frame he used because during the analysis he didn't tell me he didn't talk about the higher time frame. I had to go and find another video which he took 3 years ago, okay, and he was talking about time frames, and he said he can begin with a daily higher time frame or a 4-hour time frame. So I went to the 4-hour time frame because that's the easiest way to find it, and I marked the areas I would like us to study and analyze his trading strategy. So first of all, we have to find the swing low and the swing highs of what area we are trading. Okay, remember, this is not my trading strategy. So come here. So this is the swing. This is the swing low. Okay, that's the swing low. Okay. All right. This is the swing high. This is what I decided we are going to look at. Okay. Swing low, swing high. That's higher time frame, okay? Higher time frame. Identify the overall trend of the market. For example, the current market is in a bullish momentum, okay? because you can see it came here to the demand area, which is our swing low, came back, mitigated, and continue back to rally up. So if I'm waiting for a setup within this area, I would be waiting for a long, okay, because the overall trend of the market is bullish. He has talked about that because you already know. So we are going to go to 1 hour, okay, 1 hour, there we go, so that we can find our zones. All right, remember we have high probabilities, low probabilities, and medium probabilities. So for me, we'll be just looking at higher probability. So for example, let's go to something else that has already happened. Let's ignore this part. So let's focus if the trend, currently the trend is uptrend, but let's focus if the trend was on a downtrend. Okay, so this is our swing high, okay, which is our supply. So he had to wait for the market to change. After changing, he can take a trade within these areas. Okay, this is what I'm talking about. So these are the high. Let me show you what I'm talking about. There you go. So as you can see, high probabilities. We are trying to find these higher probability zones. Okay, high probability. So this is GBP card. As you can see there. So this is one high probability zones. Okay, we wait for the market to come. Okay, remember we have to wait for the break and the mitigation. That's where the setup happens. Okay, remember we are looking for shorts. So here we go, higher probability again. So these are happening within the internal structure. Okay, internal structure, okay, of the analysis of the higher time frame. So this is what we will be looking. Let's draw them up to there because I don't think this one is high probability. So when he comes to take the trades, he can go up to 15 minutes time frame, but for us we're going to leave it at a higher time frame, or we can do it, but I want to make the video as short as possible. So this is what I'm talking about, higher probability. So this is where the setups would happen. Okay, so for example, this is a bearish type of trade, so that's a short area. Okay, it's a very good setup according to his analysis, market mechanics. Okay, there you go. So that's a very good setup because the market is coming back to mitigate the zones. Okay, so that's where the entries will be. So for example, that would be a very good entry. Okay, and here another entry after the market came to mitigate. So let's just assume the trade was taken exactly after the market gave the green light. Okay, the conditions were met, so that means he would have gotten that trade somewhere here. Okay, the trade would have gone. Oh, that would be a very profitable trade. Okay, all right, so those are high probability areas. Okay, there's another one. So basically this is what that trading strategy entails of. Okay, nothing much, simplicity at its best. I might have missed a little bit of things because this is not my trading strategy. I'm just highlighting the best trading gurus or the best trading masters outside there. Okay, so I might have missed some things. You can visit the channel and look and see if the trading strategy works for you. But for me, this trading strategy is very nice and very simple and can give you very good setup. For now, we are out. Let's meet tomorrow for another great and interesting video as we always do.